the latest concerns from the Eurozone coming in and its visible impact on prices?
I think people have overreacted on the downside. The European Central Bank have stated that what happened in Cyprus is not going to happen in other developed countries. So I think the markets will be reassured and that things will revert back to normal very soon.
How are you looking at the higher supplies from the US, OPEC, and its impact on prices?
I think OPEC could export somewhat less this year to accommodate less demand for imports into the US. So this is because they need to make sure that there's not an oversupply of crude oil in the market. Otherwise, prices would fall below $100 per barrel for Brent, and that could jeopardize their government budget as a result of lower export oil revenues. So I think OPEC will be very, very disciplined this year to make sure that they export just enough crude to maintain $100 plus Brent crude prices.
How do you see the Chinese demand? The recent data showed a decline in imports.
I think 1 month's decline doesn't make a trend. We still expect that the new government will implement reform steadily in the next 2 years, and this would transform the economy from unsustainable, unhealthy growth to clean and quality growth, with GDP averaging 7.5% to 8% per year. And this should allow for gradual pickup in import oil as a result of still difficulties in boosting domestic oil production.
The crude oil prices have come up sharply from this January's highs. On the edge of getting into negative for this year, where do you see the prices headed?
We expect prices to stabilize soon because we are forecasting $115 Brent crude price as a result of China's economy bouncing back and the US economic recovery. So I think as long as the recent scare over the Cyprus deposit tax doesn't spread into a contagion, I think improving economic headlines should be able to support oil prices at around current levels.